If I had to trade one strategy for the rest of my life, this would be it. I call it the ARC model. This strategy involves marking up key levels in areas of interest, waiting for a reaction at those actual areas of interest, waiting for price action to confirm and give you your confirmations for entry. Let me show you what this model looks like on the charts. Okay, here we are. We have the NASDAQ chart pulled up. So the first thing we're going to do is mark out our key levels, our areas of interest. So on the 4-hour, go here and mark out some of these key levels that we see. Most of these are swing highs and swing lows. And we'll go down some time frames to refine these areas. Okay, so A is complete. We've marked out our areas of interest by marking out our key levels. Now, what we want to do is wait for price to hit one of these areas and then wait for that reaction. When price gets to that area, it can do three things. It can either break through the area, it can reject off the area, or it can consolidate near that area until it does one of the first two mentioned. So we are going to wait for price to go to that area. Our confirmation will be a break of structure if it's a rejection. So typically I like to look for rejections, and when price breaks that structure off of a rejection, that's when I like to enter. So I like to trade with the trend. Overall trend is bullish, but there is a counter trend which we are currently in, and that is bearish. So I want to trade bullish with the overall trend. This was a previous resistance zone that we broke above. Price does like to come down and touch these zones from time to time. We'll see if that does occur in today's video. So what I'm waiting for, there's two options. Price might come up to touch this M30 supply zone and then shoot back down. Price might also come down, either hit this demand zone or hit this demand zone and then shoot back up. Price can do one of those things, or it can do whatever else it wants. But I am expecting price to hit one of these zones fairly soon. Now, that price came up. Price did reject off of that zone. Price came down to touch this zone. So I would be tracking this on the 1 minute or the 5 minute. Price came down, touched this zone. This would be the most recent swing, and this is where I would enter when price closes above this. So as you can see, price has gotten really close but hasn't fully closed above it. The first candle that breaks it, if it does break, is where my entry would be. So it looks like this previous resistance or previous demand zone has been getting respected. And also this zone right here, this break of structure zone, or the zone that is showing structure, there's a 1 minute supply zone here. So I want to see price come through and break this zone. Okay, that's the first candle that closed. I would enter in here. First candle that closed above break of structure. Would enter in here. And I will target. Best target would be, or long-term target would be this for 230 points. Let's take a look to see what happens. Okay, so price did hit this area, did hit my TP. This is when, things go your way and the market conditions are good and in your favor. Price doesn't always do this, but when things are in your favor and you line up, your entry, your strategy, and you follow your confirmations and your rules, this is what can happen. 230 points. I typically trade one mini. You can do the math. I hope this is clear and